Hello everyone, my name is BM Trades and welcome to my new YouTube channel. This channel I'm pretty much just going to be talking about trading, day trading, everything, indexes, forex, anything that I trade and anything that I do. But in this video I'm going to be looking at USDJPY price action on Monday 17th of November. So before I start though, I just wanted to quickly talk a little bit about myself. I am a 16-year-old who has been trading on and off for, about a year or so. But this past month I've been really locked in. So yeah, I just wanted to kind of journal my trading and my progress and just share my knowledge if it's useful to anyone or just, if I'm just being crazy. But anyways, yeah, so oh, touchscreen is so good. Anyway, so we're just going to be looking at what I wrote for my weekend analysis before market open. So if you guys can see this on screen, I hope you can. This is this is Saturday's last candle. So we're just going to ignore everything from this side of the screen. I hope that's right. I hope that's not inversed, but we're going to ignore everything from this side. But pretty much daily price had a long rejection wick to the downside. So if we're going to check daily price, we're going to look for the wick. And this was Friday. Look how big that rejection is. And look what it filled. An already filled fair value gap that didn't really exist. I don't know why this is being indicated. But this is a massive wick. It's probably doing something. Feeling some sort of imbalance, sweeping liquidity, whatever it is. But if we look as well, price was in the middle of a fair value gap on the 30 minutes. On the, let me see, and on the 2 hour, I think it was. No, sorry, on the 1 hour. No, never mind. But price had filled many fair value gaps on many time frames. So yes, that is something I wrote down. I also wrote that there's possible signs of continuation of bullish trend. That is true because as we can see, price did continue to rally. And then I expect price to bounce off the fair value gap it is currently in the 15 minutes. Correct. If anything, price will reach for the liquidity it lost reach and break structure back down to the downside, or price will move aggressively up after taking sell side liquidity. Yeah, dude. Pretty, as I said, bingo. Flawless analysis. It's exactly what it did. It broke that and then it just still rallying. Not so much aggressively, but it's really going well. And for today's trades, I'll go over today's trades actually. So after having such a big, first of all, massive gap for an opening candle, this is going up, this is insane. Price had a massive imbalance and, just a massive imbalance. And of course that was going to get filled any day of the week. And off that, we even created an order block, which is what really I was looking for. An order block plus a break of structure. Well, I guess you could say break of structure. It's already on a bullish trend anyway. But we see price create a nice fair value gap. And it's just filled that so perfectly that, you had to get in. You had to. And then I was kind of drawing this out just to see, what could we ping pong off this? Is this a ping pong play? But I didn't take this trade. I was just looking. Clearly, as we can see, that did not work. But then after that, I saw price do a massive, massive break in structure back up. And then instantly I knew, yeah, it's obviously going to reach for that lowest fair value gap. So as we can see, price created this massive fair value gap here, this little one, which it invest, and this one, which it respected. And I was like, yeah, sweet, let's get in. But the problem is, I didn't put my stop low enough. My stop was at the top of the fair value gap. And now this is an issue I don't want anyone to ever do, ever. Always put a little bit of fat on your stops. Preferably if you're trading fair value gaps, put it to the bottom of the first wick of that fair value gap, or to the top, whatever the trend may be. Never do what I just did there, because one, just yes, you're sacrificing risk to reward, but at the end of the day, what's better, reward or losing? I'd rather get my money than doing a silly thing like that. And as we can see, the analysis was right. This was a good trade. Break of structure, back to the upside, creating an imbalance that we filled with a fair value gap in an order block. And not to mention, did we have equilibrium? We did. It was in equilibrium. So we had 4 different confluences in one trade. 4 different confluences. It doesn't get more supreme than this, and yet I still sold it. I still fumbled the bag. And you may be asking, BM Trades, how can you do that? I don't know. I don't know. But it's alright, as my risk to reward has been getting better throughout the weeks that I've been trading, that I've been back on the game. I used to be taking trades that were like 0.85, like literally losing more money than I would be making, which is stupid. Don't take those trades. I personally only take trades 1.5 risk to reward ratio above, because then it's really not worth it. Like, you'll do one successful trade in the day, and then you'll see another good setup, but you know, as we all know, no matter how good your strategy is, it's not always going to work. And you take that really premium setup, and it doesn't work, and you're like, what just happened to all my money that I made? You know what I mean? Like, if you're trading 1-to-1 risk to reward ratio, no matter how good your setup is, you're not going to be profitable 9 times out of 10, because you're not trading the right risk to reward. Like, if you trade, you know you're going to lose money. You will. You're always going to lose money. So at the end of the day, we just got to learn to trade better risk to reward ratio, and I think that's something that I need to improve on. And hopefully, if you're watching this video and you're about to take a stupid trade, wait for a retracement. Use your retracement tools. Whatever your confluence, whatever your strategy may be, my strategy, retracement, as we can see, if you don't catch this order block and break of structure, you wait for a retracement. It's safer. Like it's not always, break of structures aren't always real. Like, as we can see, price broke structure to the downside pretty much as we created this new high, and we broke it. We broke them. But just because we had a break of structure doesn't mean anything, really. Like, you don't want to trade only 2 confluences. Like you could consider this a liquidity sweep and a break of structure, perhaps an order block. We got that upwards wick. No, not even. If you've only got 2 confluences, I would recommend you at least wait for 3. Whatever your strategy may be, don't take a low probability trade. You're already in a market where everything is against you. Just before you trade, always, line up your confluences, see everything. And I think I didn't necessarily do that wrong, so I'm happy for myself, because in the past I've traded because I've had fear of missing out. And to be honest, that doesn't make sense. But that's besides the point. Like, just only take premium setups. You're already in the losing market. Like, you're already destined to lose, so might as well lose later, not now. You know what I mean? But yeah, like, that's pretty much it. I'm still on the positive today. I only risked 1% of my account with those 2 trades. I'm still positive. I'm still up 0.5% because of my risk to reward. So yeah, I just wanted to, share that with you all. If you have thought this content was useful to you, if you thought this was educational, maybe if you just want to hate, I don't care. Drop a comment, drop a like, dislike my video, subscribe, I don't know. Do something. But anyway, thank you for watching. BM Trades out.